David Lincoln Productions.
All right, folks, welcome back to the Short Vol Show live, coming to you live from Cape Cod, Massachusetts, Orleans, Massachusetts, and you've catching me live in the aftermath of a big down move in BYND. I don't think anyone out there who's followed this closely can say this is a huge shocker. But it did occur in somewhat dramatic fashion today with this thing just tanking. If we take a look at the chart, it is starting to look more like, many people have compared this to a Tilray. And if we do look at the chart, it is starting to look more like a Tilray type situation here. Not that chart. Let's see. It depends on how many days out you look, of course. Well, there is one chart where you see up, down. But that one doesn't do it so much justice because actually, you know what? That's the chart. What am I saying? The chart is the chart is the chart. Let me move it out of the way. So it's off the highs. If you look at different time periods. Now, this is what we were talking about the other day, is that like people who are really into charts, well, if you look at different time periods, it illustrates stuff differently. Here, this is the what is this? 20-day, and you see this just big up move and big down move, and it looks like it's just done. But the farther we roll this out, obviously the stock's only been trading for less than 6 months. But if we roll this out, it looks like we're still holding on to the uptrend almost. So, like I said, really depends on which kind of perspective you're looking at here. And as we do kind of rally back a little bit in BYND, really, I'm just kicking myself because really frustrated from yesterday. I got short yesterday. I bought these put spreads when BYND was trading about $202, and it went against me for a little bit. It was up. Or maybe actually $201 is when I bought these put spreads. It basically got me long the equivalent, short the equivalent of 100 shares. So it was as if I was short 100 shares, a little over 100 shares. And it went up like $2 in my face. And I was like, oh, I don't know. And then all of a sudden it turned around and went way back down. And unfortunately, if we look, here's the action from yesterday, right? So got up to here. Unfortunately, I covered my short, before the close. If I had just left that short 100 shares equivalent, it would have been a huger win for me by far. I made a little bit of money, but I could have made way more if I had just left that short on and let it kind of ride. And so really not too thrilled about that. And the whole evening I was like, oh man. When I looked at it going down, I was like, wow, I used to be really short this thing and now I'm not. So, it's just the frustration. I know that anybody who's traded knows what I'm talking about. The frustration of coulda, shoulda, woulda. I almost, it's like when you play the lottery and you're like, oh, I'm just one number off. Is that sort of thing. And it's like, ah. So anyway, UVXY. All right. So UVXY, we did yesterday, we did roll our position out to being short 2 of these August 8 calls, the 25.5 calls. We ended up buying in our 24.5 calls, paying $2, and we sold out the 25.5 calls at $2.06. Well, those came in nicely today with UVXY down, and so now those are trading 165 bid at 167. So nice win on that one as those continue to decay. All right, so BYND, I had somebody ask me, well, why are you fascinated with this particular stock? You're supposed to be like a VIX guy. Why are you trading an individual equity? And to tell you the truth, the reason for it all is that familiar word, volatility. this is some of the highest priced options trading right now. And, things moving around, so it kind of makes sense that there's high priced options. But this issue has some meaty stuff to sell, and that has attracted me to the stock. So that is why I've been trading it. Right now, let's get I want to talk a little bit one more time about my position in BYND. Then I'm going to go back to UVXY, and I want to explain why selling naked calls it might be a good option for you. But I also want to put all the caveats in so you can decide for yourself. This is I fear that with a lot of people, when it comes to options trading, they don't have the self-confidence, because it's something that's kind of new to them a lot of times. They don't have the self-confidence to be able to say, okay, I understand this, and I know what kind of bet I'm making, and I feel comfortable with making that bet. Yes, it is confusing, certainly, especially with like a VIX product where you've got all this stuff going on. So I'm going to go back to that in a second, but let me just talk for a second about BYND. BYND, if you're going to be trading it, you need to be careful. And I've gotten burned a little bit on this myself, which is the markets are wide, and it's going to be hard for you to execute trades. You kind of have to sacrifice edge to put a trade on and to take it off. So that makes it harder to trade. I mean, you need to be right. And, for example, I've been right on direction several times in the last few weeks, but a lot of that profitability has gotten eaten up by me executing the trades. Not only the commissions, but just the kind of vig that you have to pay to get in and out of trades. So be aware of that with BYND. All right, I'm going to take the earphones off. I try to start taking them off and just monitor my levels visually here. I guess my niece is in town, so I've been practicing my guitar. I'm committed to going ahead, and I never really did it the right way when I was a kid, but I'm committed now to going ahead and just learning those scales. Going through and learning the fretboard a lot better than I had it before. So that's my goal now, and I'm spending an hour a day practicing my guitar. That's my new thing. All right, so BYND. Right now, my position is I am short strangles still. So I've adjusted the strikes a little bit, but I'm short the November 130 put and 235 call. I'm also short the January 130 put and 240 call. And my feeling on this is both A, collecting daily theta, but B, that volatility could possibly come in more. It's kind of like people who, I know that people have been trading BYND have lost money both ways, and I think that the excitement over this issue is going to wane, and I expect to see less volatility in this moving forward. Like it's just going to, I don't know if it's just going to sit in one space. That might be too much to ask, but I think it is going to die down. We've had a couple big moves in a row, and I think that people are going to get just kind of bored of trading the same thing, and it's going to settle down a little bit. If you compare it to other stocks, both in the world and in the industry, 80 volatility for a $180 stock is very high still. So I'm going to continue the short Vega thing. My other feeling with BYND, and we talked about this a little bit yesterday, but when you've got a stock that is in this hard to borrow situation, okay, it's going to come out of that situation at some point. Now, we know that more shares are becoming available in at the end of October. Now, things don't usually happen that the day that those new shares are coming are going to be available to be traded, everything loosens up. It usually doesn't happen like that on an exact day. But what usually happens is that stuff slowly becomes easier to borrow. And I've had feelers out with friends, and I'd appreciate anybody who's watching, if you have access to the rates for hard to borrow for your stock, you could look at my hard to borrow video, which I'll try to put a link up there to it somewhere on hard to borrows. But if you have access to hard to borrow information for your particular brokerage, take a look, see if because you should start to see the interest rate that you have to pay to borrow stock in BYND come down at some point. It will come out of hard to borrow at some point as more shares become available to be traded. And certainly with it moving downward, some of the people that are shorting it are less likely to still be shorted as it moves lower. And as that happens, I really believe that they're going to start to unwind this way that the puts are way pumped up and the calls are way down. And, part of my strategy with being short puts when these strangles is to take advantage of that time when the put values come in. I want to be short puts when the put values come in, basically, is what I'm saying. But I don't want to be short strikes that it's just going to blow through. So it's a balancing act. As we kind of rally back here in BYND, we're up to 83.50 now. So we're kind of rallying back. All right, so let's go back and talk about UVXY for a second. And we can pull up the screen with UVXY calls. Let's talk about why I believe, and several other people that trade this believe that naked calls is potentially a good way to play this to the short side. Now, there's much debate, which I'm not going to be able to figure out here today about, when to have a short on in the VIX and when not to. It would be wonderful if we could all have a short on and then just take it off for the big spikes and then put it back on after the spikes. And several people have different indicators and different ways of kind of getting a handle on when we could possibly spike. And thus they have shorts on, and then when the conditions seem to indicate to them that it's not a good time to be short, then they take the position off. But let's just posit for the purposes of this discussion that we've decided we do want to be short volatility at this particular moment. Okay, so let's talk about the pros and cons of being short naked calls. So the risk in your mind, you will have covered the bases for your main risk of being short one call. If you consider being short one call, that you have you've leased somebody the right to buy the stock, 100 shares of stock at that price. So if you sell a 25 call in UVXY, then it's potentially you could be given 100 short shares from the 25 strike, and you would have to ride it up as high as it goes if you were not able to buy something against it overnight. So if it were to gap upward and you're short one call, it's the equivalent of you being short 100 shares of the stock. So that is your risk. And as people will point out, you have some of the negatives of being short. You have all the negatives of being short 100 shares of stock, but you don't have all the positives of being short 100 shares of stock. This is because to the downside, below the strike that you sell, the most money you can make is what you sold the call for. Whereas if somebody was just short 100 shares of stock, then if it goes down $1, $2, $3, $4, you make $100 each dollar it goes down. If you're just selling a call, the most you can make is what you sold the call for. So it has all the liabilities of being short 100 shares to the upside and all the benefits of but not the benefits of being short 100 shares to the downside, if that makes sense. So so that's the bad news. So you might ask, well, why is this a popular strategy then for people who are successful at trading the VIX and volatility? And the answer for that is that selling naked calls, especially ones that are within a couple weeks of expiration and that are close to at the money, you are in a sweet spot because you have all the advantages of being short volatility and contango, and also what we call beta drift of a leveraged UVXY is leveraged 1.5 times, and so as as it moves around, it kind of lags. It doesn't always go up 1.5 times to the upside, but it always goes down 1.5 times, if not more, to the downside. And that's just the way leveraged ETPs work. There's explanations of that in other parts of the web. But you've got contango going for you. We're in contango like 80% of the time, and that's going to tend to pull UVXY down. If you look at the chart of UVXY over a long time, you'll see that it just slowly goes lower and lower and lower. And so what we're trying to do is just capture that. That is a mathematical thing due to contango and the way the futures get pulled down towards the spot price all the time. So when we sell a naked call, we are really we're really like putting our potential money in the sweet spot. And when trading options, it can be hard. It can be easy to like look at stuff as a snapshot, but the reality is that stuff is happening over time, and judging how stuff happens minute to minute is very different from judging how it happens from one day to the next day, like close to close, is way different from judging stuff one expiration cycle to the next. And when you have a call that you're short, and you could consider this, I keep calling it a stock. I know it's not a stock, it's an ETP. But if you have a call that's like 100 volatility plus in an issue that's right now it's around $25, $26, and that call, it has like a week to go. It is decaying at a very rapid rate. So although it doesn't look like much when you look on the screen and say, oh, I'm selling a call for $2, in a week it's going to be most likely zero because it's at the money and this thing is trending lower. Let's say in the average the call would be zero in a week. If you're selling it, you might not be selling for $2. You might be selling it for $1.50. But in average in a week, it's going to be zero. You're decaying at a very rapid rate. And although it seems like, oh, that's a bad deal because if it goes up, I can lose an infinite amount of money. If it goes down, I can only make the $150 per call or $200 per call that I'm selling it for. So it seems like a bad deal. But the thing is you're right in the sweet spot where not only do you have everything that being short the VIX has going, or being short VIX ETPs, UVXY or TVIX has going for it, but you're adding the decay of the call on top of that. And that's a very positive little soup that you've mixed together there. Now, the most important thing with this strategy is that if you get a spike, like we got a spike yesterday, you don't cover it. You leave it as an unrealized loss, and you hang out, and you let time work in your favor. And if you get towards the day before expiration and the call is still in the money, roll it out to the next week, same strike. You'll collect a little bit more premium, and you roll it out to the next week, same strike. And over time, even if you get a big spike and this goes up, $10, $20, over time, it will come back down and you will realize a gain. Unlike a stock where like it can get away from you and it'll never come back. Apple once was $50. It will never come back to $50 probably. But UVXY is always going to move lower over time. And yes, you've had to wait up to 8 months at some situations, but it came back. And the whole time those 8 months are waiting, you are collecting decay on your call. Now, if the call is like deeper and deeper in the money, if it's $20 in the money, you're not going to collect much decay per day. But you haven't realized the loss until you actually cover the call, and so you just hang out and you keep rolling it. Now, under normal conditions, what's going to happen is you're going to sell a call. It's going to go out worthless. You'll make the money. Then you go the next week, sell a call. It's going to go out worthless. You'll make the money. But we want to look at our risk, right? And so the risk is to the upside, and the way to manage that risk is we just roll out the trade to the next week, same strike. And you just keep doing that. And as time goes by, even if UVXY kind of stays in the same area, you're going to be collecting decay on that call, and then when it does go back down and through the strike, you're going to realize a gain. So this is why it's popular to sell naked calls in UVXY. And yes, some people do spreads, but spreads aren't, you don't have as perfect of a storm with spreads as you do with weekly calls, because the reward to naked calls is that you're collecting every penny of that premium. And if you have enough money in your account so that being short 100 shares of something, being short 100 shares of a $26 issue is something that you could weather. Like, I would say, I would model your position at this spiking 100%. So you want to be in a situation where, like, okay, well, if UVXY pops to 50 for a day, I won't have to cover. My account won't blow out. And that's the kind of yardstick you want to look at. But if you have enough money in your account to do that, and fortunately for us, the capital requirements to sell a naked call are going to force you to have a bunch of money put aside, but that's not enough money. You want to have, like I was saying, or maybe a rule of thumb would be every $10,000 you have in your account would afford you to sell one call, one naked call in UVXY, something like that. And like I said before, this has all these caveats to it. I was trying to find the intro that says, I'm not a licensed financial advisor. You need to consult a professional before you make your own trading, before you make decisions. I'm not allowed to give you advice. I'm just stating some trading ideas and education. And this is stuff that the more you learn, the better, right? So you don't necessarily want to do what I do or what other people do, but I'm telling you from experience and messing around with this stuff for a while that this is kind of a sweet spot that several people have latched onto, and I have several friends who have done well with this particular way of doing things. Now, it's great also to have cash on the sidelines, because if you get a spike like yesterday, let's take a look at UVXY. Okay, that was what happened. That's not what happened yesterday. That's what happened the last year. This is what happened yesterday. Boom, huge spike, right? And if you have cash on the side when this happens, look, now you've got to be on your game, because this is spiking here. It's right after the Fed announcement, and you need to jump in and be aggressive enough when everybody, turn off your StockTwits when you've got an action like this going on, because people in StockTwits are going to sit there and say, go long the VIX. This is our time. It's time to get long volatility right at the top here. I guarantee if you look back to yesterday, right at the top here, people are like, I'm a genius. I'm going to make $1 zillion, 28 bid for as much UVXY as I can get. So you need to turn that stuff off, and you don't want to give them the farm up here, but if you have the ability to sell a call and you've been listening to my strategy this whole time at the money, up here at the money, no, I don't think you would have had time to sell like the 28 call at the money. But let's say more reasonably, like the 27 strike. If you could sell an at the money 27 call here with a week to go, that would be a great place to start out. And you have enough money in your account so that if this does go up to 30 and stay there for a while, it's okay. You lose a couple $100 maybe, or $100 or something, but you've got the money to cover it. You're not going to be forced to cover. But that would have been a great place to jump in. Now, spreads are safer. Spreads, you know exactly how much you can lose, but you're giving up a little something when you put the spread on. You're giving up a little edge. If we look at, like, just to kind of show what I mean, if we just look at the options, if we're looking at a naked call here, like the 25.5 call now is 150 bid at 153. Okay, if we were to put the spread on, sell for example the 25.5 27 spread, well, we'd be selling this call for $1.50, but you're buying another call against it for $1.08, or the midpoint. So you're basically, you're only going to be able to sell this spread for like 40 cents. And so, yeah, you might make that 40 cents and it's safer, but you could be selling it for $1.54 instead of 40 cents. And it's a big difference over time, week in and week out. The number's a big difference here. And yes, there's a lot of risk associated with selling naked options. I don't recommend it to somebody who's just starting out. However, if you're just starting out, it's good to know what people are doing, right? It's good to learn about this stuff. And so there you have it. All right. Thanks for watching today. I appreciate all the commentary from everybody. Good luck in BYND. I kind of suspect that the bottom is not in here, and I'm personally still leaning a little bit short in BYND. Major market rally today, huh? I guess rate cut, like somebody was saying online, rate cut in a bull market. Why would you not buy it? So there you have it. I have to go off to... I got to go shave and go off to work. All right. Thanks for watching, folks. We'll see you in the next one. Best of luck to you.